Hello everyone and welcome to another video on the channel. In today's video, we're going to be talking about 4 rules that you can use for supply and demand trading. All right. So, there are a lot of systems in the world that work. It is though very hard to find a proper system that you can use over and over again without, changing the rules and all that stuff, because that's basically what most people are doing. So we designed basically 4 very important rules that you can use on a day-to-day basis. For obviously our trading system, which is supply and demand trading. And there are lots of ways of entering, of drawing your zones and all that stuff, and choosing the right zones and all that. But I'm going to keep it very simple here for you guys. All right, so we'll start off with rule number 1. So the first thing you need to know is what analysis time frame you're going to use and what entry time frame you're going to use. Okay, so if you really want to have good entries with good risk to rewards, you're going to need a smaller time frame to enter on the zones that you chose on your analysis time frame. Okay, so if you're not doing that and you're just using one time frame, which is something you can definitely do, your risk reward is not going to be that good and you're going to make less money. Okay, so there are lots of time frame couples that you can use. I'm just going to use an example here, and you can use, for example, the 4-hour time frame with a 15-minute entry. Or if you want something more intraday, maybe you can use a 15-minute entry, zone, so analysis with a 1-minute entry. This is definitely possible. Maybe you're looking at weekly zones with a 4-hour entry. Okay, this is just an example because this is the time frames that we're going to be covering once we get to the real charts. Okay. Second of all, we need to see a break of structure on our analysis time frame. This is what we need to see. All right. So, and I just made this, this is an example. So we can see that we have a high, we see a break of structure of this high, basically a break of this high. This is a valid level. Price comes back to that level and then it reacts to it, which brings us to the next point, okay, which is a fresh level. So once price broke this previous high and it's a valid break of structure, the zone is created with this area right here. If we extend this to the right, we just wait for price to come back, and this would be a fresh level, a level that hasn't been touched yet. Now, if price were to do this, come back, this wouldn't be a fresh level anymore. Why? It already reacted to it. So this would be the second time that price came to this. So we try to avoid these levels. So these two basically go combined in this drawing. Now, rule number 4, basically you can have several rules. These are basically 3 different rules in together with one rule because they go together, right? So we need to have an entry rule, how we're going to enter, okay? So we can use pin bars and engulfing candles, which is what we use: bearish pin bar, bearish engulfing, bearish pill bar, bullish pill bar, and bearish engulfing, bullish engulfing. Our stop loss is usually between 10 and 20 pips. Okay, so if we enter on any pin bar or engulfings, usually with our stop loss a little bit beyond the candle, it's usually between 10 and 20 pips. Okay, so we know this, we have this calculated already. And our targets usually for these trades, okay, on these time frames, are usually between 50 and 100 pips on average. Okay, obviously if we're going to look at 15-minute zones with 1-minute entry, you shouldn't be targeting 100 pips. Okay, maybe you should be targeting 30 to 50 pips. All right, which is definitely something that you can see basically every single day. Okay, so take a screenshot of this, whatever you want. Pause the video, write it down, or take a screenshot, whatever you want, because I'm going to be deleting all this and we're going to get to an actual chart. Okay, so we're going to cover every single rule. Move drawings. There we go. Get to the chart. Okay, perfect. So what are we going to do? We're going to be looking at a break of structure first, which is rule number 1. This move right here. Okay, did it break structure? Yes, it broke a previous low. So this is a valid break of structure. What do? We draw the zone. This, okay. Obviously, there are many different ways. Some people do the entire candle. We do it like this. And then we extend to the right. And we wait for it. And what do you know? Price came back to this level. Is it a fresh level? Yes, it's the first time price is entering the zone. Perfect. Okay, this is perfect. So we already have first rule, which was basically our time frame, which is a 4-hour time frame. our analysis time frame. We're seeing a break of structure, rule number 2. Rule number 3, is it a fresh zone? Yes, it is. Now we're going to get to the interesting part, the last part, okay, which is our entry. So I'm going to replay like this. I'm going to go to our lower time frame. We see the zone is nearby. Okay, we're going to use our sessions indicator to see where we are. We are doing Asian sessions, so this might happen during London or New York, who knows. Okay, so London is opening. Okay, this, for example, some people would say this is a valid entry. Since we almost didn't even enter the zone, we are still going to be waiting for a better entry, obviously in the zone. I know people, they set like limit orders and stuff right here at the bottom of every zone with like stop loss a little bit beyond. I know a lot of people do this way, but the stop losses are huge. Okay, so your risk reward is not going to be good. So it's better to just wait and see how price is going to react now during New York, okay, which is opening right now on the next candle. And there we go. Okay, and now it's just waiting time and seeing if we find a bearish pin bar. And there we go. We found a very valid, strong bearish pin bar during New York. What can you do? You can enter right here with stop loss a little bit beyond, okay, maybe 17 pips, which is between the 10 and 20 pip range. And you can say, okay, is this a valid level? Yes, it is. So let me just show this tool on the hourly chart. Let's see what we can target. Maybe we can target 100 pips, okay, to begin with, as a beginner, which is, not a super crazy risk to reward, but it's almost 1 to 6, okay, with just one single entry. So this is pretty decent, okay. Obviously, yes, you can definitely target the next low and all that, I'm just saying what on average happens with targets, which is usually between 50 and 100 pips. Some zones they give maybe 50, some zones they give maybe 150. It really depends what kind of zone it is. In this case, for example, we were in a weekly zone, so the reaction could obviously be stronger. But in general, it's 50 to 100 pips on average, just to make sure that you're getting paid. Okay, so if you want to target this low, which is a little over the usual, which is almost 150 pips, it is fine as well. Okay, it's better risk to reward. Maybe at 100 pips, what you can do is take some partial profits. Okay, or once price moved 100 pips into your profit, maybe move down your stop loss and try your stop loss. Okay, so you gotta, you're at least secured your 100 pips. Then it's just waiting time. Okay, how many pips did this move already in just one candle? It already moved 60 pips. Okay, so to 100 pips, you're not that far away. Let's see what happens here. And there we go. It almost even moved to 100 pip profit, which 100 pips is right here. Okay, we're going to actually draw a line there. Good. So this would be 100 pips. Okay, and our target could be this low, for example. So what you can do, for example, here, when you see this, is set your stop loss at 100 pips and you secure the 100 pips. If it gets taken out, you get taken out. Okay, because at least you still had your 100 pips. Let's see if this thing wants to work. Seems like it's lagging a bit. So, like I said, if you move your stop loss to 100 pips right now, okay, something is happening. There's no worries. So, like I said, if your stop loss, if you move it to 100 pip in profit already, then you secured your 100 pip profit. Okay, so this is just very easy, simple, and trading system, guys. There's nothing complicated about it. Okay, there's not really much more to it. I can go on and talk about the same stuff. Maybe I'll look for a buy scenario if TradingView lets me. But this was already a beautiful example of a valid break of structure, a fresh level on the 4-hour time frame with a 15-minute entry, with our target. Here we go. We're back with our target. Okay, so when we went back to here, okay, and you saw this reaction happening, maybe you put your stop loss over here and you get taken out. That's fine. If you didn't get taken out because maybe you left your stop loss at break even and you took some partials over here, That's fine as well. And then maybe your target got finally hit over here, as you can see, at a better risk reward. Okay, so let us look for a buy scenario. Let us see if we can find a valid buy scenario. Okay, over here. As you can see right here, this whole move, break of structure of all these highs. Okay, so this is definitely a valid level. There are quite some zones that we could be using. We could use this zone. Okay, this would be one zone. This would be one zone. And, this would be one zone. And a very small one right above, which, I wouldn't even be trading because it's a really small zone, so I'm not even going to look at that. So these are all break of structures. Okay, break of structure. And these are all valid levels, fresh levels. Okay, price hasn't reacted to those levels yet. It would be the first time that price comes to these levels. Okay, it entered this zone and it's getting out this zone, so we'll take a look at the next one, which would be this one. So we go on our small time frame again, and we look at our sessions indicator. We can see during London a bullish pin bar. Beautiful. Okay, you say, maybe you're thinking, okay, there's a bullish pin bar over here, why didn't you enter right here? Well, first of all, it's because it's the first time price entered the zone. We know that usually after the first time, it will be definitely the second time that price goes back in the zone, and usually deeper. Okay, so we see this bullish pin bar. Wait for it. Enter. Stop loss a little bit below, maybe 16 pips. Okay, we're moving this. Okay, and let us see what we can target. Again, you should know where we are. We are in a weekly buy zone, so the reaction could be pretty strong. So maybe targeting just 100 pips, which would still give a pretty decent risk to reward. Okay, and definitely a good place to maybe trail your stop loss to if price goes deeper, or maybe take some partial profits over here. Okay, if price gets here, and maybe let the rest run. But since we're in a weekly zone, it's definitely good to have a further target and basically have a weekly target. But we're gonna stick with the 4-hour right now. So just pretend that this is only a 4-hour zone and not even a weekly. So this case, we're just waiting, and let's actually draw where 100 pips is, because we're already pretty close by just with this one candle. Okay. So let's see what price is gonna do. We're almost there. There we go. We hit our 100 pip take profit level. So if you took some partials over here, perfect. If you didn't and you moved your stop loss to here, perfect as well. Your price just went deeper. So your 100 pips is secured already. Now it's just waiting time. There we go. We finally hit our target very, very fast. A beautiful 1 to 17 risk reward if you manage to hold it to this level. Okay. So guys, we just showed you two examples. Okay, one sell scenario, one buy scenario. This is very simple. You just need a break of structure on our analysis time frame, which in this case is a 4-hour. We need a fresh level, which is in this case, in the previous sell case as well. And then after that, the only thing we need is our entry, our stop loss, and our target, which I've just shown you. Okay, this is basically the whole process behind it. There's not really much more to it. Obviously, you need to understand where we are in the monthly time frame, how strong each 4-hour zone is, because that obviously is going to have an impact on the target. How much you can target, how many pips, and all that, which is definitely something that comes with time and understanding your pair, understanding the market, understanding the timing, London, New York, all that stuff. So all combined, our trading system is pretty simple. Then obviously there are quite some things that go together with it, like I just said, monthly time frame and all that. But that is maybe for the future, in future videos. Okay, for this video, we just want to keep it very simple to you guys and just, um, show you these 4 trading rules for supply and demand trading. Okay, so guys, this is it for this video. I hope you find it helpful. You shouldn't overcomplicate trading more than this. You don't need anything else. Okay, this is it. There's nothing more to it. All right. So guys, really hope you enjoyed it. We appreciate you watching this videos. We would also appreciate a like and the sub if you haven't already. If you have any questions, just let us know in the comments down below or send us a DM on Instagram. We'll be more than glad to help you out as always. And if you're looking for more in-depth training, take a look at our link in the description where you can take a look at our website, watch the case study video, see what we're doing for our members and all that. And if you want more info, you can always book a free discovery call with one of the coaches of our team. So guys, thank you for watching. We'll see you in the next video.